Your deposit isn't the full story. Lenders care about your LVR and you should too. Let's go to the whiteboard. So, LVR is loan to value ratio, right? So for example, if your property value is $1 million and your loan balance is $800,000, LVR is simply your loan divided by the property value, right? And this will give us an LVR of 80%. Now the difference, the other 20%, is the deposit you put down towards the property. So in this case, it's 1 million minus 800,000, which means our deposit is $200,000. Now, why this is important is because when you go above 80% LVR, the lenders charge what's called LMI, or lender's mortgage insurance. And this is an insurance premium that's added onto the loan amount in the event that you default on your home loan. Now, as a first home buyer, if you qualify for the first home guarantee scheme, you can get this LMI fee waived. Also, if you're an associated professional like an accountant, a doctor, or a nurse, you can also get this LMI waived above 80% LVR. Now, LVR measures your risk to the lender. The higher the LVR, the more risk you are to the lender, which means higher interest rates. On the flip side, the lower the LVR, the less risk you are to the lender, which will mean lower interest rates. So let's see how it will look as the LVR tier goes lower. Now for this example, we're going to give you a rough estimation of what the interest rates would be for your owner-occupied property as the LVR tiers go down. So for example, if you have a 90% or under LVR, meaning that you have more than a 10% deposit, the lender would charge 5.89% on your interest rate. Below 80% LVR or at least a 20% deposit, 5.69%. 30% deposit or under 70% LVR, 5.64%. And then a 40% deposit or 40% equity in the property, which is under 60% LVR, interest rate will be 5.60%. So as you can see, the lender rewards you as you develop more equity in the property or you put more of a deposit down for the purchase. So again, your servicing is always going to be better at the under 60% LVR because the interest rate is lower than, say, someone that puts down a 10% deposit. So I hope that helps. LVR is a very important term. It's used across not only home loans, but car loans, commercial loans, business loans, and it's really important to understand what it is and how it can affect your home loan. If you need any help on purchasing your first home, click the game plan call link below, and we look forward to helping you with your first home.